Good morning, traders. Welcome to the Phoenix Blue morning update on Monday, the 18th of April. I'm Tom Colley, and I'll be taking you through the markets and the news this morning. And it's the news that dominates. We had a meeting at the weekend in Doha in the Middle East, designed for all the major oil-producing countries of the world to come to an agreement on freezing production at January levels. The meeting broke up without an agreement, and we'll start over with the news and talk about that because that's so dominant. There was a build-up last week of positiveness in respect of an agreement being reached, but then on Friday it was clear that Iran would not be attending the meeting. They would not be part of an agreement. They've just had their sanctions lifted, and their stance is they believe they should be allowed to bring their production up to pre-sanction levels before taking part in any sort of production freeze. Even following their absence over the weekend, there was still some positive noises coming out that agreement might be reached. But at the end of the day, Saudi Arabia absolutely vetoed that. They have big political issues with Iran. So in hindsight, the simple non-attendance of Iran should have been enough to tell us that there wasn't going to be an agreement. However, the reaction to that, we will expect major gaps at the open, certainly in crude and related currency pairs. One other thing that came out over the weekend is in the last few days there's been a strike by Kuwaiti oil production workers. Production has, in the short term, been reduced by almost 50%. Which is a really significant level. You'll see a quote here where they were processing 520,000 barrels a day on Sunday, but previously they'd been at 900,000 barrels a day. So as I said, almost a 50% reduction. Now, if this strike was to continue and that level of production cut was to continue, that in itself would amount to more than the production freeze that the meeting was about. So it'd be interesting to watch how that pans out and how that affects the oil market. Okay, so over to crude oil. This is the WTI, the West Texas Intermediate crude that we tend to concentrate on trading. The unexpected big gap down, some profit taking, I'm sure, after the open has driven price back up. We expect to see further lows in this market now. We potentially will see this gap close first. I know, talking to Phoenix Blue traders last night, a number of them were looking to take trades from the point that the low here where the gap closed. Over on the Canadian dollar, which we know is basically just the inverse of oil. Again, big gap up last night. Overnight, we've had a slight pullback, again, possibly being the profit taking. Same rules apply on this. Potential for that gap to close, but certainly we would expect new highs in the US dollar CAD driven by reducing oil prices. Over in the Far East, we've seen on the Shanghai composite, the composite for the Chinese equities markets, we've seen a bearish move down to this level that we'd indicated here previously. It's not broken that level. It's a significant point in confluence with this channel here. We discussed last week that as long as price stays within this channel and above this level, we'd take that as a positive, but the real, shall we say, recovery in the market would potentially be the break of this trend line here. Over on the Nikkei, gap down, bearish session, unsurprising in the light of what happened in the oil meeting. Over on the yen, similarly, Japanese strength, yen strength, forcing the market lower here. We were looking for entries into the market at this sort of level last week. We had a very bearish day on Friday, which indicated we probably weren't going to get that entry. We almost certainly aren't going to get that entry with the effect that oil's had in this market today. So where are we looking for the week ahead? Well, we really covered this somewhat on Friday, but I want to look at three major markets that we are interested in, and really what we're interested in is dollar strength. This is the dollar index, the weekly chart at the end of last week, or really this morning. But the interesting factor is we've got an engulfing bar here suggesting that we're going to see dollar strength. We believe that's the case. We had COT signals across most of the major currency pairs, some of which I talked about on Friday, suggesting that this is a potential low. So we will be looking for a return on dollar strength and looking to trade that this week. We've already been trading that based on those COT signals. We were in this market early. You can see how near the top we were in this euro market, really at the top when it turned huge bearish engulfing bar down last week. We've entries in place looking to get back in and add into this market. We can see our T2 target down at this level. This is the weekly chart, so that's a significant level, and we are looking to hold our trades. We've got taken some profit at this level. Stops are at break even, so there's no risk. We'll be looking to do the same at the add-in, and we'll be looking for this market to fall quite substantially over a concerted period of time, and see a lot of potential in that trade. Similarly, probably even more strongly in terms of technically, we've got the Swissy, the CHF USD here. Again, huge weekly engulfing bar there. We have got a significant level at this point. We're looking for a break of that level to add back in. We're already got the trade at the bottom of the swing here. Stops are at break even. We've got money off the table. We've no risk in the market, so we can add in quite aggressively. We would look to add in this market at the same level as our original trade, because all the risk is off the table. And then we'll look to lock in profits on the way up, particularly once this significant level's broken here. Our initial T2 target is this level, but quite possibly these markets will follow through higher as the weeks go on. Okay, so that's really the sharp end of what we're looking to trade this week. We're also short in the S&P. We've got in a sell-off there. We gapped down initially this morning on that, but we'll wait to see the US Open to see what the net effect on that is, and we'll be watching that alongside gold, particularly to see if we get a full risk-off scenario, which is our predicted or hoped for scenario. Okay, so what you've been looking at here is what we call our pure analysis. That's the Phoenix Blue pure analysis. You can see we use clean charts. We look to buy and sell with the banks. We only trade with a fundamental bias. We also use independent commitment of traders analysis. Because of the analysis, the three types of analysis we do, we can use very tight stops. So on FX, we're normally trading with a 40 pip stops, which means our winning trades are more profitable. We need less winners to be profitable. If you're interested in this, you want to improve your results, you just want to ask some questions about commitment to traders, anything like that, please just email us at info@phoenixblue.co.uk. If you want to, we can have a half-hour consultation with you where we can talk about what we do relative to what you already do, see if it's possible for us to improve the results of your trading. We need to know that you're in a position where our systems will help you, so we won't automatically say, yes, please come on board, on one of our training courses or something like that. We do want to see a match between yourselves and ourselves. Now, I'm Tom Colley, and if you have any questions about this specific video, please email me at tom@phoenixblue.co.uk. Okay, that brings the morning update to an end, and until tomorrow morning, goodbye.